Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again in the euro currency. Well, maybe the situation from the technical point of view hasn't changed significantly, but if you will read today's update, I have posted some news, some comments from the traders of the large banks, and in general we could say that the sentiment and in general the assessment overall situation is rather bearish for the euro currency, because investors think on comments from the Mario Draghi that Euro Union stands at the eve of the possible quantitative easing program, and that also have been confirmed by the jump on the Morgan Stanley and Goldman Sachs banks. I mean shares of these banks, because they have really very large branch net on in the European Union. Well, that's really bearish comments from the traders on perspective of the euro currency, and that probably could make us a bit nervous concerning whether we will get the bounce up and maybe market will continue move lower right now. And so I just want to call you to not panic, and nothing really drastic has happened despite this downward gap that we have got on yesterday on Monday's open. In fact, guys, from the technical point of view, this gap down has really a very simple explanation, because on Friday market hasn't quite completed the ABCD pattern, and by the gap down market has hit the target. So right now I'd suggest that the bounce up has more chances to appear than the downward continuation by some reasons. First of all, market stands at the weekly confidence support. Second, market stands at the target of the ABCD pattern. In other words, we stand at confidence agreement on the weekly chart. Also, market is oversold on the daily chart and stands at the weekly pivot support line. So the chances on the bounce really significant. In fact, guys, here we have the Jordan bullish stretch pattern, and if your money management allows you to trade daily patterns directly without waiting the possible patterns on the intraday charts, then you could try to do this. But keep in mind that this will demand more risk to cover, and that's just demands for more assets to trade the larger scale patterns. And I can't exclude that market really will bounce up. So I'd suggest a retracement. How deep this retracement will be, that's another question. But since we stand at the strong support, and since market oversold, and the financial markets do not like to stand in oversold condition for the extended period, the commodities that the markets that could stand with the oversold condition for a long period and could remain in oversold or reward condition for a long time. But financial markets do not like this. They usually touch the oversold or overbought and just trying to exit from this uncomfortable condition. That's why, since this oversold is accompanied with a very strong support, it's not time to think about entering short right now. Again, due to this really solid support and oversold, it's probably the retracement and the respect of this support should be sizable, and I can't exclude that probably market could show retracement right back up to the weekly pivot resistance 1, fib resistance and daily overbought, and that's nearly around 133.75. So I suspect that this probably will be the first destination of the possible bounce up. At the same time, we can't exclude the continuation right to the 135 even area. That's also possible, because guys, that will be just the 3-8 retracement of the whole ABCD pattern. That's just a minor retracement compares to the ABCD pattern in relation to the ABCD pattern. That's the most probable retracement, most often happened retracement that usually you could see when the market completes some ABCD pattern. So we just do not want to speak about it right now because it stands beyond the overbought condition. It's just a bit extended target. And why we think that this really could happen? On the point for this is that on the euro currency you do not see clear the patterns that could be formed. We would not see clear some really pattern that the market could trigger this bounce up. But if you will take a look at the Swiss franc, you will see it. Here, as you can see, that the top on the Swiss franc stands precisely at the 1618 extension of the most recent retracement down. And the 1618 ratio is very typical for head and shoulders pattern. That's why I can't exclude that this is really the pattern that could come and that could trigger the retracement down. So the first bounce, if you take a look at the yearly or at the euro chart, that will be the retracement right back up to the neckline, and that will be 133.75. But 135 is corresponds to Swiss franc this ABCD potential target. Okay, that's approximately things that we see right now on the European currencies, on the Swiss franc, on the euro currency. Currently, guys, maybe something other will be formed. Maybe market will form double top or some double bottom here or something of that sort. But some pattern probably will be will appear. And the combining these two pictures, the euro currency and Swiss franc, the head and shoulders is most probable and looks as the most probable pattern on the right now, at least based on the situation, on the price action that we see right now in these markets. That's what we will be watching for. So guys, our first conclusion is that do not overestimate the heavily bearish comments in the mass media right now concerning the perspective of the euro currency, because technically picture suggests the bounce up, and probably this will happen. Second, the bounce probably will be valuable and sizable because market stands really strong support and then never sold. At the same time, guys, current situation, if you take a look at the intraday charts on the 4-hour time frame chart, this small island that has appeared as the gap down has happened reminds me the very well-known pattern that usually forms at commodities markets that have break in the trading sessions. Unfortunately, the forex market has no pauses and has no breaks between the trading session within the week, inside of the week. So as market opens on the Monday, this was 24/7 trading process till the end of the Friday. But when on the commodities market, when that has the break between the trading session day by day, this well-known pattern, and many of you maybe know about it, and that pattern calls as island reversal. The idea of this pattern is when the market opens with a gap down, shows some tight consolidation, and the next, when it will be formed, market shows the gap up and upward action, and that causes the island reversal. So by the market mechanics and based on this pattern and based on the really strong support where the market stands right now, we could suggest that it could become the island reversal if your currency would have the break in between the trading sessions. But by the market mechanics, current price action is where it corresponds to the well-known island reversal pattern. It's just a suggestion, is that's some analogy that I see here, and that just reminds me of this pattern that I saw very often on the commodities markets, and by the market mechanics it reminds me on the euro currency. Well, but we will see what really will happen. So what could be done today? If you do not have real significant assets to trade directly on the daily chart, just wait when market will form some reversal pattern on the intraday charts. Here, guys, also some smaller pattern could appear. For example, smaller head and shoulders that could let you to take the position. If you have the significant assets and you could trade directly the daily patterns, you could try to trade the stretch, Jordan stretch pattern, with the stops below supports on the weekly chart. That's in fact all that we could do on the euro currency. But guys, do not really be frightened by the really bearish comments on the on the TV and the internet concerning the bearish perspective of the euro currency. Yes, that's true in the long-term perspective, but it absolutely not necessarily means that in the short-term perspective market will not be able to show some retracement. And that retracement is what we are really watching for, as from the perspective of the trading on the long side of the market, as from the perspective of the possible better level to take the short position for the longer time perspective.